Hello, good morning and welcome to this edition of Buy Now, Sell On ET Now. I'm Cheryl D'Souza along with Varun Hiramat, and looks like we are up for gains this Friday as well. If you look at the market setup, we've been gaining for the last two trading sessions, and today as well, Varun, we are holding on to gains. If you look at most of the Asian markets, they're shut on account of the Lunar New Year's. You have only Japanese market that was actually trading in today. But let's talk about what our markets are doing today. Like I mentioned, the benchmark indices are holding on to gains. Both Sensex and Nifty are trading in the positive territory. If you look at what the broader markets are doing, they as well are actually trading with gains. It is the metal index that is declining in trade, along with FMCG index that are seeing some sort of cuts in trade. About 0.8% is FMCG index. That's the one that's seen the cut. Also, metal index is down about 0.7%. You have pharma index also that is declining by about 0.4%. On the gaining side, you have realty sector that is gaining in trade. PSU banks as well holding on pretty smartly, as well as the IT index that is gaining in trade. Let me talk about which are the other stocks that are actually that need to be in focus. One of them is ITC. They reported their Q3 earnings yesterday. It seems cuts on that particular counter was seeing cuts when it opened up for trade. Also, if you look at M&M Finance is gaining in trade today. You have ICICI Bank that's gaining. You have the IT stocks that are gaining. That's your Infosys that is gaining in trade. On the losing end, like I mentioned, ITC is declining. You have Coal India as well as ONGC that is declining. But for now, if you look at benchmark indices, Varun, looks like it will be a stable Friday for us. But apart from these stocks that are actually gaining in trade, but what is the market setup looking like? We have Kunal that is joining in. Good morning, Kunal. How is the market setup looking like? If you see the last few days, Nifty is trying to hold on to gains, and it is particularly Reliance Industries that's actually aiding the Nifty. How is the market setup looking like from here on?
So good morning, Cheryl. Yes, I think the market setup has been extremely strong. There has been hardly any point of any period of complaint, or I would say an exaggerated complaint for the markets. We've seen very good strength from overall markets. Still, just look at the last couple of days. I think this week it was a bit of a wobbly week for markets. The indices were going into a bit of a range action. The action was shifting back towards mid-cap names. You had very good strength which was coming across from Reliance Industries. But hey, the markets have are taken again by surprise today. The Bank Nifty has been doing exceptionally well, and you're seeing a very strong bout of outperformance coming into the banking name. So just as a comparative, Nifty is up 0.3% so far today, and the Bank Nifty is already up more than 1%. And not just that, it's more to do with the large cap banking names which are doing exceptionally well today. So that itself tells you that at every leg of the market, whether it's consolidation or whether it's jump up on the higher side, there are new legs of or rather new support levels which gets established from the market perspective. Now, in terms of individual calls, I would suggest a mix of two buys, but again the mix is more towards some strong, solid, large cap, mid cap names, as well as something which is very interesting. So the first one which I'm picking up is a Bandhan Bank. Now, as I said earlier, that banking stocks are doing exceptionally well. The reason why I'm flagging off Bandhan Bank is because the stock had already corrected from 420 to 300, sub 300 levels. So this round of 30% correction or 25% correction or a mean reversion seems to be have gotten over for Bandhan Bank. More importantly, the stock is now on the verge of breaking out of a cup and handle kind of a pattern. So this could be interesting for the stock at a time when the Bank Nifty requires many of its components to fire up. I think Bandhan Bank could be another banking name which can move up significantly from current levels. So buy with a target of 366. Stoppers could be kept at approximately 325. And the second is which I'm suggesting a buy is again from a mid-cap name. It's a buy on Tanla Platforms. I think that stock which has done exceptionally well from 70 rupees just around 8-9 months back to 700 plus. At 700 levels, the stock apparently has consolidated for 3 months. It's forming a bullish flag pattern. You look at the very, very short-term charts in the last 3-4 days as well. There were multiple attempts towards breaking below that 670 mark, and all of those attempts have been bought into. So it's an interesting mid-cap name which is getting highlighted on charts. Would suggest a buy on this stock for a positional target to be kept at 850, and stoppers could be kept at 670.
All right, that's Kunal's view on the market as well as his high risk and low risk idea. I'll just repeat them for you. One is he has a buy call on Bandhan Bank, that's a moderate risk idea, and he has a buy on Tanla Platforms, which is a high risk idea. We also have Sharmila Joshi joining us this morning. Good morning, Sharmila, and what are your calls for a view of high risk, low risk ideas?
Yeah, good morning. We are seeing market on a bit of a tear, and it really becomes sort of imperative that you take part, and at the same time you sort of protect yourself against any kind of volatility that we may see in days to come. So the one sort of low risk idea that I'm going with is obviously from the IT sector, and it is a stock which I may have spoken of earlier, HCL Tech. This has been really my favorite pick within the IT space, and the kind of returns that it has given in this last year sort of bear that out. And I think even going forward, if you were to go look at the results that they have delivered this quarter, a very robust set of numbers, and more importantly, a very, very good and strong order pipeline is what they reported, what the management reported in this quarter. So going forward, once again, I think if you were to look at a forward multiple, then this is probably, trading at a valuation lower than the other large cap IT names, and you could look at targets of closer to 1250, 1300 on this going ahead. The slightly high risk idea that I'm going with is Tata Motors. We have seen the stock really been on a sort of a runaway returns that it has given in these last 3 or 4 months. Part of it, of course, is because of the fact that we are seeing good numbers, good traction in their JLR piece. But that also becomes something that could go against them going ahead. How things will pan out in Europe, and whether this traction that we are seeing for Land Rover and Jaguar that continues domestically, how they're able to deliver, etc. Because they have now many moving pieces, since majority of their revenue really comes from overseas. So this is a stock that I like. I think there is an upside from here, but you need to keep these factors in mind. So Tata Motors would be the high risk idea.
And those are the ideas coming in from Sharmila. It's a low risk idea is HCL Tech, and the high risk idea is a Tata Motors. So that's the calls coming in from both of our experts. But let's move on and let's get some viewer queries on board now. We have a first viewer query coming in from Anand Chitale. He has 2 queries, and first up he's saying that he's bought Bharti Airtel at 614 rupees per share. He's saying that the earnings have been strong, but the stock is down. He wants to know whether he should exit or hold the stock. And the other query that he's asking is he wants to know the outlook for Tata Steel and whether there will be any upward movement in that particular counter. So Kunal, first let me get your view on Bharti Airtel. Like the viewer also is mentioning, it's strong Q3 results, but the stock is down. So what should he actually do with Bharti Airtel? His buying price is 614 rupees per share.
So I think first on Bharti Airtel, I think it's a very interesting large cap name. I've been very bullish on the stock earlier as well, and maintained buy calls on Bharti Airtel quite a few times, and the stock has moved up higher gradually. So even though the process of the stock moving up higher may not be as clean as or as neat as compared to any of the large cap names, but nevertheless, I think the trajectory, when you look at it from a point-to-point basis, has been on the higher side for Bharti Airtel. Now, the reason why I believe that probably post-result the stock has not performed and probably scaled past or broken past about the resistances is because there was a huge built-up on the option positions on the short side. So I remember tracking the options data very, very closely, and right from the 620 strikes towards 650 strikes, there was a huge built-up of short positions on the call options. So that probably generally lets the ceiling of the stock price for the near term. My sense is that since these are February expiry positions, possible that Bharti Airtel could remain in this range and may struggle to break above the 620 mark. But I think if the breakout happens above the 625, 630 zone, which could be a net resistance point, then you could see a very strong uptick. So if you're in from a short-term perspective, I think you should you can probably wait on Bharti Airtel. Above 625 is where I believe a much bigger breakout could be expected in the stock price.
Breakout for Bharti Airtel at 625 levels. Sharmila, what's your take on Bharti Airtel right now? Good performance coming in. Also, you see a lot of interest coming in the telecom sector. What's your outlook for Bharti Airtel, and what should our viewer do, whether he should exit or hold the stock?
So for me, the stock is a hold, and just as we discussed in the case of HCL Tech, the factor that gives me comfort in HCL Tech is that they are on a good earnings trajectory, and I think the same thing can be said for Bharti Airtel. If you see the kind of numbers that they have delivered this quarter on all the key performance indicators that one would look at, when you look at a telecom stock, whether it's ARPU, whether it's the subscriber addition, etc., on all those boxes you have a tick for Bharti Airtel. And again, I think their business on all fronts, whether it's Africa, India, everything is firing. Then you have that whole 5G waiting to play out. So if he's a short-term investor, I think that becomes a separate thing altogether, because, as Kunal said, I completely agree that, post results, maybe in February, you could see the stock to be slightly range bound. But if you were a longer-term investor, for me, this stock is a definite hold. Very honestly, there are only a couple of we have three listed plays in the telecom space, and I think among those three, Jio is still part of Reliance as a stock, and then you have Idea, Vodafone, and then you have Airtel. So I think Airtel would still be my preferred pick within these three. So for me, Airtel is a hold.
Hold coming in for Sharmila. Sharmila, what's your take on Tata Steel? Anand also wanted to know what's the outlook for that particular counter, and will there be any scope for any upward momentum?
Well, again, I think if his outlook is long term, he can continue to hold, because what we've really seen is a good rally in commodities over this last 5 or 6 months. A lot of it has to do with the way iron ore prices have moved, the way global demand is bouncing back for steel. And commodities, and especially steel as a sector, is really dominated by what is happening on the global scene. Because all through these last 3 or 4 years, domestic demand was there, but the fact that prices globally weren't going anywhere, a reflection in the stock prices. But that has now begun to show up in stock prices. So once again, because the rally has taken the stock to, I think, almost twice the price that it had maybe a year ago. You would be a little cautious, but I still think that if you're a longer-term investor, there is still some steam left. So from that perspective, and again, I think if you look at numbers delivered by most of the steel, aluminum, Hindalco, I think just day before, very good set of numbers. So just going by that, again, the stock is a hold. Here again, concern could come from the fact that they're trying to sell the businesses that they have in Europe, and the stock tends to react to that. But overall, for me, Tata Steel stays a hold.
All right, hold is the call coming in from Sharmila for Tata Steel. Kunal, what's your view coming in for Tata Steel? Like Sharmila also mentioned, we've seen a good rally coming in for the metal sector, but in particular for Tata Steel, how is the chart looking like?
There are two time frames to look at, for metal stocks, and from here on, I think that's going to be very, very interesting, because if you are in from a short-term view, then I believe it's a very, very high probability that Tata Steel and many of these other steel names, they could go through a downward drift, they could go through a consolidation. These stocks are now coming very close towards their 10 years, and Tata Steel particularly is now coming back towards its 10 or a 12-year high. 700, 720, I think apparently has been a big resistance for Tata Steel. And even this time around as well, you've seen that how the stock has struggled to break past about 720 odd marks. There was an attempt towards breaking out that 720 mark, but it got failed, and the stock is now back below the 700 levels as well. So from a shorter term angle, I believe the struggle could probably continue for Tata Steel. But then I think, even if the stock consolidates, and I'm talking of it now from a longer term view, even if the stock consolidates, I think that should be considered as a healthy consolidation, because the last 8-9 months have been just about extremely positive for metal names. From 250 rupees or 260 rupees, Tata Steel has jumped up to 700. So it's but natural that these stocks consolidate, take some time, spend some time in a range before you get new set of buyers to try and push the stock price higher. So I think now it's a matter of time horizon. If you're in from a short term view, then I believe chances of the stock consolidating are very, very high. But if you're in from a longer term view, then I believe if there is any correction along the way, it should be taken as a good buying opportunity or an averaging opportunity.
All right, that's the call coming in from Kunal on Tata Steel. Let's move on and let's get on board our next viewer query. And this query is coming in from Manoj Gopinath, who wants to know what's the outlook for Karur Vysya Bank. Kunal, I'll go first with you. Karur Vysya Bank, if you look at today's charts, definitely is down in trade. That's on back of the Q3 earnings that it has reported. But otherwise, what's the how are the charts looking for Karur Vysya Bank?
The chart, I've been tracking this stock very, very closely. So when I was looking at the major part of the banking names and the smaller digit rather banking names which have done pretty well, Karur Vysya Bank was one of the stocks. I think if I'm not wrong, the stock was sub 20 just approximately a year back in the month of March when many of these stocks corrected, and now it's scaled past about that 55 or 60 odd zone as well. So it's a stock which has shown a lot of potential. It's a stock which has shown complete change of trend, and that's very, very rare to see for a stock like Karur Vysya Bank, because the history, at least the last 3 years of history prior to that, 2017, the stock was at 140 levels. From 140, the stock falls down to a level of sub 20. It's very, very difficult to try and reignite the trends into these names. But the fact that the stock has been able to do it, I think that itself is a very strong signal. So I think the chart patterns on the near term as well as on the longer term, seems to have improved quite a lot for Karur Vysya Bank. And if it's one of the holdings from the entire banking names which you have in a portfolio, then I think you should continue to hold on to this stock particularly.
All right, that's the call coming in from Kunal for Karur Vysya Bank, saying that the chart pattern has looks to have improved both on the short term as well as long term for Karur Vysya Bank. Sharmila, what's your take on Karur Vysya Bank? How's the outlook looking? Fundamentally, a good bank, sound bank to be invested in?
Well, so here's the thing. I mean, just to take off from what you were referring to when you spoke about the numbers, we didn't have a particularly good set of numbers from Karur Vysya Bank. So again, my preference would be to sort of stay with safety in terms of numbers. And there I find more comfort in the larger private banks. So whether it is an HDFC Bank, whether it's an ICICI Bank, whether it's a Kotak Bank. Maybe at this point in time, I would prefer a Kotak Bank over the other two stocks that I mentioned. But the point being that my safety, I would feel better buying these stocks at this level rather than investing in a Karur Vysya Bank. Because I think here again, apart from the fact that I didn't get too much of meaning the numbers were sort of okayish, there's also this thing that you're really waiting for something to play out over here in terms of some norms changing for private banks, or something else happening at sort of a corporate development level, which can pan out. And if you're lucky, I mean, that's a slightly riskier call to take and stay invested in Karur Vysya Bank. But I would prefer to be with a Kotak Bank or an HDFC Bank or an ICICI Bank.
All right, that is the take coming in from Sharmila for Karur Vysya Bank and the banking sector as a whole. All right, on that note, thank you Kunal as well as Sharmila for joining us on the show, giving us your take on the markets, your calls, as well as resolving the viewer queries. All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned to more news on the other side. Don't go anywhere.
Hello and welcome back. Let's welcome in the management at Tech Wabag. It's the result season that we are in. Let's welcome the management right now. They're joining us after their numbers. Mr. Rajneesh Chopra from Tech Wabag is with us. So first, start by the main factors that contributed to advancing of revenues and profitability this quarter. What were the key takeaways?
As far as 9 months is concerned, year on year, Wabag has performed significantly well. In spite of a COVID year, we have registered at 9 months year on year, we have registered a growth of over 3.5%. And even the bottom line has shown a significant improvement. If you see our PAT, it is currently at 63.6 with our last year of 60.5. So both on the top line and bottom line, we have done pretty well. As far as order intake is concerned, although we have executed 1,832 crores, we have been able to, successfully get around 1,500 crore worth of orders. So our order book also currently stands against 11,000 crore at the beginning of the year. It's around 10,700 crores. So overall, it has been a satisfying year, considering that, it has been a COVID year. The key things which I would attribute is, first is we would like to thank all our, suppliers, all our employees, all our stakeholders that in this particular year when we had such challenging times, first quarter was a very, very strict lockdown, but our engineering and procurement team, they worked from home. So on the EP front in the first quarter, the progress was, almost 60-70%. Construction definitely had taken a hit. In Q2, we realized that our overseas projects, they started performing pretty well in terms of even the construction phase. And now you see in the third quarter, we are almost nearing 90% of our, productivity levels at, even construction across the various geographies we operate. So these are the key things which I think have ensured that we are there, almost there where we were last year, and going forward also we feel this will continue.
Right. So if we just, further go and talk about results, can you just also talk to us about, how has Q3 been versus probably Q2, and how do you see the order book going ahead from here on?
See, our current order book stands at 10,700 crores. And if you see here, amongst this 10,700 crore, almost 33% is our order book from O&M and 67% is from EPC. I think it's a very, very healthy situation because definitely margins are better on the O&M front. And if I look at the municipal industry backdrop, it is 13% is being contributed by the industrial and 87 comes from the municipal sector. So overall at 10,700 crore, we have a clear-cut visibility going forward of at least 3 years, which in our opinion is a very healthy situation considering our growth plans.
Good morning, Mr. Chopra. This is Cheryl also joining in. Let's talk about the projects. And the rest of the world projects seems to have clocked more revenue than the India this time around. So what are the receivable days for the rest of the world projects compared to the domestic projects?
That's a good question. I think we have always said even in the past that going forward, we have been continuously, our endeavor has been to expand our, presence across the geographies. So in the past, we commented that, Middle East and Africa is going to be our growth catalyst. And I think we are already seeing signs of that. We invested there. We created a cluster of business head position for this particular MEA region. And if you see our order book, we have substantial order book now coming in this particular year from that particular region. So overall, I think it's a very, very encouraging things. Definitely our cash flows on overseas projects are far better compared to Indian projects. And we see this trend to continue going forward, that definitely we would look at initially 50% coming from India and 50% from overseas. And gradually you will see that our overseas business will contribute more than what India is going to contribute.
So taking it forward, Mr. Chopra, what is the stance on receivable days and overall working capital cycle? And also, is it at an optimum level right now?
I think as far as our working capital is concerned, we are definitely, much better than what we were in the past. But our endeavor will be to, further improve our working capital cycle. And going forward, you will see that there will be at least, 10 to 15% improvement as far as working capital cycle is concerned.
So water has been one of the key focus areas for the government. As we all know, the Jal Mission has been there. What kind of opportunities do you see over there? Being one of the largest players, how do you expect to benefit from it?
I think that's a very valid question. We are extremely encouraged by the announcements in the current budget. I think water is a focus area for the Indian government. Amongst all the schemes put together, we see a very huge outlay for next 5 years of totaling to almost 4.5 lakh crores. I think one of the leading one is Jal Jeevan Mission, where they've announced for next 5 years 2.7 lakh crores. And I think this is something where, it's our honorable Prime Minister's vision, where he's talking about Nal Se Jal for every household in the country. Now, this will initially have more of the construction phase, and being a technology player, we see as Wabag, we will be playing a very, very crucial role in ensuring water security, because government has gone on record to say that 20% of the water supply has to be supplemented by recycled water. And Wabag is one of the leading technology players as far as recycle is used. Also, Niti Aayog has been talking about capitalizing on the huge coastal line of over 7,500 kilometers which India has. So to supplement the supply, we see when there is exponential demand in terms of water supply, sooner or later desalination will support the resource or augmentation, and that's where we find that there is a substantial role for technology players like Wabag to play. Also here, I would like to mention that Namami Gange, I think Wabag has been one of the successful companies in contributing to cleaning of River Ganga. We have ongoing projects there, and even for the next fiscal year, I think Namami Gange has been given around 9,000 crores allocation. And another positive thing which has happened is that there are 33 rivers under NRCD, which now government is planning to, implement the pollution abatement, starting with the ones which are more polluted. And it will follow a similar model. So that itself opens a huge opportunity for companies like Tech Wabag.
So newer technology in the recycling, you just spoke about this. What are these kinds of new technology that you're referring to? Has Wartech developed one or gained access to a newer one?
Wabag has always been, our core strength has been technology. As you know, we have our 3 technology centers, one based out of Chennai, the other one is at Vienna, Austria, and the third one is in Switzerland. If you see our recent order book, we just announced close to 100 million euro order secured a few days back. Now we have an order coming from Libya, which is on thermal desalination. So Wabag is one of the few players in the world as far as desalination is concerned, where we have a technology to do seawater RO, thermal desalination. So there are very few companies who can do any kind of technology as far as desalination is concerned. We have, commissioned 7 plants in Swiss. This is for removal of micropollutants from water and wastewater. Switzerland has been the first country to, legislate and bring this removal of micropollutants. So Wabag has been a front runner there, and currently 7 plants are already commissioned, and even our recent order, which has been secured of around 26 million euro, it again reinforces that we are the leaders as far as water and wastewater is concerned, because no other country has even gone for that advanced technology for removal of micropollutants. So going forward, we find that other geographies, I think Germany, Japan, Singapore are already in the process of removal of micropollutants. So this will be one of the key things where Wabag is already future ready to capitalize on the global market scenario.
All right, Mr. Chopra, we'll leave it at that. Thank you for joining us on Buy Now, Sell Now. And that was Rajneesh Chopra, who is the management of Tech Wabag. All right, on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more updates on the other side. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. And let's talk about ITC. It's the top loser on the Nifty today. If you look at the way how it is performing, it's seen its sharpest intraday drop since December 21. It was down about over 4% in trade as well. It's set for the 5th consecutive day of losses. Let's see what the brokerages are actually saying on ITC's earnings. You have Credit Suisse, which is actually maintaining an outperform stance with a target of 265 rupees per share. Credit Suisse is saying that cyclical recovery augurs well for FY22. They're saying they're seeing healthy FMCG performance once again for ITC. They're saying cigarette business saw encouraging recovery. FMCG growth remains healthy at 11% on a year-on-year basis, as well as hotel losses sees sharp reduction. Agri and paper was soft. This is a call coming in from Credit Suisse for ITC, but if you look at that particular counter, that is actually declining in trade. But as you can see, the FMCG earnings have come to a close for the third quarter. Let's get in our research analyst for FMCG sector, and that is Vinny Motiwala, to make sense of how the companies have fared this time around. Vinny?
So talking about the FMCG space, which has not seen much of an impact during the COVID period, as well as most of it did come in the essential space, and they have managed to see a good growth even on those days. Even in those times, they managed a good growth, and now that growth is continuing even as of now. Look at the volume growth, they managed to do quite well even in quarter 3. Dabur has managed to post the highest volume growth in the FMCG sector and has come in at 18%. Now, one of the other major key trends that we saw coming in from the FMCG space were that rural has continued to drive the growth for FMCG companies, while most FMCG companies have also highlighted that urban demand is now catching up, and we are seeing a good recovery coming in the urban demand as well. Metro cities also are coming up as things are easing out. Another trend that we're seeing a recovery is the out-of-home consumption. That has surely shown signs of gradual recovery. Look at the commentary coming in from Britannia. They did say that drinks has witnessed a gradual recovery. So that is showing out-of-home consumption increasing. Even Tata Consumers said that sequential recovery seen in Nourishco as well as Starbucks. Surely a gradual recovery trend coming in, shaping up over there. Health hygiene segment continues to soar. That has surely managed to see good growth even now. Though demand for sanitizers is something that is tapering off and highlighted by most of the FMCG companies. Discretionary spends, on the other hand, which was a bit subdued during the last couple of quarters, is now seen recovering, whether it's GCPL's premium segment seeing a healthy growth, to Jyoti Labs fabric care segment also seeing a good growth, Marico's VAHO seeing a strong recovery, and HUL's color cosmetic segment also seeing good recovery, while ITC's discretionary out-of-home consumption has also seen a smart recovery coming in. So good recovery coming in over there. Other than that, we had other trends were rebound in hair oil segment as well was something to watch out for, as well as costs of increasing costs of raw material is something that was a pressure on the gross margins. But companies have said that they will be taking judicial price hikes, cost-saving measures, as well as reducing their ad spends to set off this increase in raw material price going forward as well. And this was the overall commentary coming in for the FMCG space.
Thanks, Wendy, so much for that. Earlier in the day, we managed to speak to Titan, of course, a part of the consumer discretionary, who declared its numbers a couple of days back. Let's hear out from the MD at Titan.
It's a little difficult to comment about whether the 28% kind of level is sustainable over time. It's a pretty high growth rate to comment, but we are very confident about all the underlying factors. One is, of course, the market share opportunity, which is intrinsic to Tanishq. And the second is overall wallet share shifting in favor of weddings that we've been having a view about over the months. The third is generic preference of trusted brands in these times, and particularly in this industry. The fourth is multiple things that the division has put out in terms of omni-channel, remote shopping, which will continue to be an expectation from consumers in 21 as well. The fifth is the exceptional focus on safety that we have put in ever since May, and we continue to execute it to the satisfaction of customers. So there is an all-round, both the underlying factors to the divisions and the brand's advantage, and of course the many things on execution that the division is putting in, which is giving us a lot of confidence about Q4 as well as FY22.
Welcome back. You're watching Buy Now, Sell Now, and it is time now to unveil the answer for the BNSN quiz. Let me recap the question for you, and that is, which of the following Tata Group stocks gave the highest return this year? And the options were Tata Elxsi, Tata Communications, Tata Motors, and Tata Steel. If you look at all the Tata stocks, the way how they have performed over the last 1 year is nothing short of astonishing. But the answer for this is Tata Elxsi, and that is the right answer for this question. But let's see who are the winners for today. And we have Sanjay Tamrakar, you have Roshan Kumar, as well as Vipul Gaur, who are the BNSN quiz champions for today. And Tata Elxsi was the right answer. Then let's talk about your travel plans and what's going to happen to that. Well, the flying within the country is now going to get expensive. You have the DGCA that has released a statement on government's decision to increase the minimum as well as the maximum fare set for the different routes, while extending its earlier decision of allowing airlines to deploy up to 80% of their pre-COVID domestic capacity till March 31st, 2021. While the minimum fare has been increased by 10%, the maximum fares are up by 30%. My colleague Karishma is here with all the details. Karishma, fill us in with what the DGCA has decided on the FS.
But just when the sector has been moving ahead to its path of normalcy, now DGCA has released a statement that the government has decided to increase price cap fares on the domestic flights. These have been already in place since May 25th. That's the day where flights were resumed after the COVID lockdown. And now government has decided to increase the minimum and the maximum fare on these price bands by 10% and 30% respectively, which means that now a normal Bombay-Delhi flight, which was costing somebody 10,000 rupees, will cost about 13,500. Or for example, a Delhi-Kochi flight, which initially until yesterday was costing about 14,000 rupees, will now be costing 20,000. The caps and the increase and hike has been put as per keeping in mind the demand factor and also the routes that Aviation Ministry had shortlisted into 7 categories. Well, the government currently has allowed 80% flight capacity for airlines. We are learning that airlines have requested to increase this capacity. The government is working on it, but likely the price band is going to stay in place until April, because that is when the government thinks that the normalcy in terms of pre-COVID levels can be expected to be back.
All right, thank you, Karishma, for getting us those details on the airfare, and it's all set to rise is what Karishma is saying and what the DGCA is saying, Pankaj. All right, and with that, we are out of time on this edition of Buy Now, Sell Now, but stay tuned, markets at noon coming up next.